Hello traders! Last time, we talked about looking at market cap and volume in trading. This helps us figure out the volatility we might expect. Today, we're shifting our focus to something else important. Identifying key support and resistance levels, lesson of our course on the base trading strategy. In today's lesson, we'll focus on what it means in traditional trading and then compare it to our version of support and resistance, known as base trading. Understanding how to define a base and how to utilize bases instead of other technical analysis tools. Introduction to support and resistance. Support and resistance levels are essential elements of technical analysis. Support represents a price level where buying interest is strong enough to prevent the price from declining further, while resistance represents a price level where selling interest is strong enough to prevent the price from rising further. Let's explore how we can identify these key levels and use this in base trading. Historical price data analysis. We will start by discussing normal support and resistance, and after that, we will delve into support and resistance in base trading to understand the differences. The traditional method for identifying support and resistance levels is to analyze historical price data. By looking at past price action, we can identify areas where the price has repeatedly reversed or stalled, indicating the presence of support or resistance. In base trading, we use a method for identifying support and resistance levels. We will start by redefining support and resistance levels as just bases, as well as make sure to never draw them diagonally, only horizontally, and we only draw them for the support and nothing else. We can look at the chart data to identify where these bases would be in comparison to regular support and resistance, where the two are separate. In base trading, we combine both of these and draw a singular base to represent our justification for a trade that we might take in the future. Trend lines and channels. Trend lines and channels are valuable tools for identifying support and resistance levels in traditional support and resistance. Trend lines are drawn by connecting swing lows for support levels and swing highs for resistance levels. On the other hand, channels are formed by drawing parallel lines along the highs and lows of price movements, providing a visual representation of potential support and resistance zones. In base trading, instead of trend lines and channels, we use a parallel line or a horizontal trend line as our support. We draw this at the bottom of a pivotal movement in the candlestick data. Pivot points. Now, let's talk about the simple method used in base trading. Base trading is all about keeping things easy and paying attention to clear signs in the price movements rather than using complicated tools. When we draw bases, we're looking for important points in the candlestick data. Once we find these points, we draw a line at the bottom. This line becomes our base. We make sure it's a strong support level by checking how big the bounce is on the chart. Remember, if the bounce isn't at least 10%, it's not a trade we want to take. By sticking to simple strategies and focusing on key price moves, we aim to find good chances to make profits with more confidence. Let's dive deeper into this approach. Volume profile analysis. Volume profile analysis is a powerful tool for identifying support and resistance levels in traditional methods based on volume traded at different price levels. Areas with significant volume indicate strong levels of support or resistance as they represent areas where many buyers or sellers are active. We do not use indicators or tools such as volume profile analysis for base trading. Instead, we use previous price action to help us decide where we believe the buyers are the thickest in that market. Don't worry, we will discuss this later. Putting it into practice. Now that we've covered various methods for identifying support and resistance levels, in the module Practical Application, we'll explore examples and case studies to illustrate how to apply these techniques in the context of base trading. As we conclude this lesson, remember that identifying key support and resistance levels is critical for any trader and how they have now evolved into what we are learning, which is known as base trading. Thank you for joining me in this lesson. In our next lesson, we'll delve into why candlestick patterns are irrelevant to the base trading strategy. Until then, happy trading.